Hello, I'm Victoria and I'm Senior Consultant at Hyde Real Estate, and today we're doing a Q&A with the very knowledgeable Nathan from SPF Private Clients. This session is to explain who SPF are and how they differentiate themselves from the market. This is also to introduce you to the new series Keys in Dubai, which we'll be going into later today. So I find it hugely beneficial using SPF because they take a full holistic approach to the mortgage market in Dubai. But why don't you enlighten us and give us a bit more detail on that, Nathan?
Absolutely. So effectively, SPF Private Clients has been going now for 27 years, I think, in total. So we originally started in London, and now we're here where we are, and we are now an independent global mortgage company based in London, UAE, Singapore, Hong Kong, and of course we facilitate mortgages all around the world.
Fantastic. And so one of the reasons that I wanted to have this session with you today is that I feel like in Dubai, or certainly the UAE in general, when you have these conversations with mortgage brokers, they're very focused on just that mortgage and that particular client. So if you could just share a little bit more about why you guys are different and that you take more of a zoomed out sort of overall view on a client situation.
Yeah, for sure. So one of the big things we found, and the reason why we've come over to the UAE, is actually we kind of followed our clients. So we were noticing that a lot of our clients were coming over here from London in particular, and a lot of these clients have assets in the UK. So with the assets in the UK, naturally, we were in a position that's quite unique of where we can not only help people in the home country, but also help people over here. So you'll find scenarios sometimes of where somebody might have a property in the UK, it's got a lot of equity in, we're able to pull money out of that property in the UK by doing a mortgage over there, using the London team, and then of course bringing those funds over here to enable them to buy through you.
Yes, very good. So I think also it's hugely beneficial to also mention about the London, Dubai, or certainly the UK market and Dubai, because we obviously are seeing a trend of a lot more expats moving over from the UK here. So I think the difference being, from my perspective anyway, certainly what I found with our clients is that if you were to just go to your bank here in the UAE, you necessarily wouldn't get the best rates, or they wouldn't be able to take an overall view of somebody's situation. So how is the market in Dubai at the moment, and what's that looking like, and rates and all of those sorts of things?
So you're right, because you understand the UK market as well. It's effectively, when we look at mortgages in total, I think like 95% of people in the UK will use a mortgage broker, for example, as opposed to just going directly to the bank. Main reason for that is your bank is only ever really going to limit you with what they can give, versus they don't look at the whole of the market.
Fine.
So what you had over here is you had probably 3 or 4 years ago a lot of cash purchasing, not a lot of mortgages. Now we're talking about a market where it's 50-50. So you've got 50% of people buying cash, 50% of people doing mortgages.
Interesting.
So it's a serious shift, and it will probably keep going more towards mortgage. So it's now key for people to understand that you are completely correct. Going just to your bank does seriously limit you on what rates are available, how much you can borrow, and then even little things like your mortgage terms and the eligibility of what else can come with that. And that's why I'm here.
Good to know. And in terms of fees then, and how that works in Dubai, is that similar to the UK market at all? How do you guys get paid? What are the fees involved with purchasing a property here in Dubai?
Yeah, so slightly different to the UK.
Okay.
For us in particular, we do not charge any broker fee.
Okay.
So we will look at the market, who's available for a client. So you introduce me to somebody, I won't just go to the bank they're banking with, I will look at the rest of the market to see whether or not they're getting the best deal in the market. We won't charge a fee for that, because we do get our fee elsewhere. So that's always a benefit to the client, and we always try to make sure that they understand that we're not only just showing them the rates, we're going to take them from start to finish. And because the mortgage market here is slightly different to the UK in particular, lots of people need that, to be honest.
Yeah. What I found working with you guys as well is that it's more of a hand-holding approach. So you have relationships directly with all of the different banks in the UAE, which allows you to pick up the phone and have a conversation with an account manager. Versus if I was to just go to my bank here, who would I contact if I needed an update, if I needed a letter? Whereas you guys will sort of really walk somebody through that process.
Service has always been a big thing for us. To put into perspective how big we are as a firm, we do approximately 20 billion dirham a year in property finance globally. So, that kind of allows us to build relationships with lenders that some people might not have. So we do have direct access to certain underwriting, account management, and that hugely benefits the clients. Like I say, in service for us, if you're not doing the service part right, it's all wrong. And when we guide people from start to finish, we keep it very minimal. They can directly contact me or my assistant throughout the day. Hopefully not a Sunday, but every other day of the week is absolutely fine.
Fair. And also, so we've been talking a lot about the UK market and the Dubai market. So how does it work if you're a resident and a non-resident as well?
Yeah, so the key differences are over here is rates and loan to value percentages for a resident versus a non-res. The interest rate market itself is actually quite similar at the moment. So interest rates in the UK, you're probably looking at around 3.99 to 4.5% on average at the moment. Over here, 3.89 to 4.24% for a resident, so quite similar. However, the big difference here is the deposit levels. So in the UK, obviously, I think you can even do a 95% mortgage, but over here, the maximum loan amount you can actually achieve on your first property would be up to 80% on a property that's under 5 million. Over 5 million, it's a 70% lending, 30% deposit. So a little bit more amount of money that you need to be putting down, and then of course you need to factor in, you've got the DLD at 4%,
which is 4%,
and then agency fees at 2% as well.
Yeah.
So the other fees that come on top of that. So all in, if you're buying under 5 million, you need about 26% cash ready. If it's over, then you need 36%.
Okay, that's good to know. And in terms of affordability then, if we're looking at things like deposits, how does it work in terms of car loans, credit cards? Because I know that plays a part as well.
Massive part. Like, I think people don't realise how much of an impact that can be. So I'm sure we all know when we first get in, we get given our credit cards, the limits tend to be ridiculously high that we're allowed to go up to. But what people fail to understand is when you're looking from an affordability perspective over here, they will take 5% as a monthly commitment of what your credit card limit is.
Right, okay.
So that's quite a chunk off. And when you look at the calculations that they use, they tend to take your fixed income every month. So whether that's your base salary plus housing and transport allowances, they will then divide that automatically by 2. And then after dividing it by 2, they will then take away your commitment. So if you've got a credit card for 100,000, they're going to take 5% of that as a limit, as a deduction, should I say. And then any car loan on top of that, they're also going to take away.
Fine.
So obviously we all need cars here, as we know. But the credit card limits, we can kind of adjust because most people aren't spending that amount. So we can reduce those limits to make affordability easier.
And I think it's also a good point to note is that even if you have a credit card with a 100,000 dirham limit and you've only spent 1,000 dirhams, that will still affect your affordability, right?
Exactly. And that's the whole reason of why, if we look at the behaviour of somebody spending on their credit card, if they've got a 100,000 limit, but actually they're only doing 5,000 a month, we will say to them, well, look, reality is, if you actually reduce this down to a 25,000 limit, your borrowing will go up by X amount. And you'll tend to find that most people are like, I didn't even know that, reduce my credit card now so I can actually buy what I want.
Sure, okay. And then in terms of, so that's looking at an individual. So if you're looking at couples, I'm guessing the same rules apply. And in terms of what happens if one person wants to get the mortgage in their name, but they both want to own the property, how is there options there? What can you do in that situation?
So if you've got two people and they're both earning, then of course you can go ahead and just do a standard joint mortgage if you like, and what they will do is they take the affordability into consideration for both of those.
For both.
However, if you have a scenario where one person's earning and the other one isn't, or they only want to use one income, you can do a mortgage known as a co-applicant mortgage, and what that will do is they will work off of the affordability of the sole person, the singular person, and then they will allow both of those to go on the title deeds. So one is being used for mortgage purposes, both on the title deeds, which you find super beneficial, to be honest, because that could, in theory, in future, if that other person wants to go and buy a property, because their affordability has not been used previously, in theory, we can use their affordability on their own and get more.
Good to know. And in terms of applicants then, are you allowed to apply for mortgages if you're not married, as relatives? How does that work?
Relatives okay, as long as you provide certain documentation.
So that's brothers, sisters, mothers, fathers. Okay, interesting.
Obviously with mothers and children and stuff like that, it kind of changes things because the mortgage term might be too short.
Okay.
But brothers and sisters you will see, friends no.
Okay.
Married, yes.
Fine.
Married, you need to provide an attested marriage certificate for you to actually get a mortgage with your partner.
Okay.
If you don't have it attested, get it attested, because when you go for a mortgage, most lenders in this market want to see that.
Interesting, good to know. So let's say we've now purchased our property, we're a couple of years down the line.
Yeah.
The Dubai market's thriving, we've paid off some of our mortgage, we've got a little bit of equity in there. How does it work in the UAE with terms of like taking some cash out? Can I use it to go on holiday? Or do I have to use it, you know, to do a refurb? Or
Yep.
how does that work here?
So this is a big thing that I've been doing recently, because what I've noticed in this market is the appreciation of property values is unprecedented. Like anywhere else in the world, you just haven't seen what's gone on here. And without going into community examples, you have seen people buying, I don't know, 4 years ago, 3-4 millions, and their properties are now worth 10. So not only do they have a serious amount of equity in this property, they're unaware sometimes it's actually achievable to get money out to potentially reinvest. However, what you just said about holidays and stuff, no way. That's not. So we call it controlled funds. And what a lender will do is they will allow you to refinance and pull money out of that property, but it's for reinvestment purposes only. So it's either renovation works can be done as well, as long as you supply the correct building works, etc., etc., or it's a refinance to purchase an onward purchase, and they would need proof of the onward purchase.
Okay, so obviously we talk a lot about here in Dubai the secondary market and the off-plan market. So in my mind I'm thinking, okay, I've got a bit of equity, I want to buy another property, I'm going to rent that out or whatever I want to do with that. What about if I want to purchase an off-plan property in Dubai, meaning that it would be cash only and the property's not quite ready yet? Could you still use equity release for that?
Absolutely. A lot of people are doing that. They've, again, without highlighting particular communities, but they've had a serious increase on their property value, and they effectively are now asking you, where's the next project?
Yes.
So they want to get the money out and go again. Now, who's to say whether those properties are going to skyrocket in the same way, but people are fully aware of the fact that when you buy off plan versus when it's due to complete or handed over, there is a massive price difference.
Yeah.
So they're trying to favour off of pulling cash out now, purchase that one, wait for handover, and then revisit to see where they're at.
This is why I think it is, as I mentioned at the beginning of this conversation, so key to work with guys like you, because again, if you go to your bank directly, they won't take this overall approach. Also, I feel like in Dubai, because now it is so much more of an established market, you're now seeing a trend similar to the UK where people are saying, okay, we're here, we live here, we've got our home, but how do we diversify our portfolio? And we've seen so many successful transactions through the help of you guys doing those things that are a little bit more outside the box thinking.
I think a lot of this has been to do with the golden visa and the 10-year thing.
Yeah, so that's a really good point so just enlighten us on the golden visa thing as well.
When you're purchasing 2 million or above, you automatically get access to the golden visa, which is that 10 years.
10 years.
So, but I think also what's changed, if you look at communities, schooling, health system, everything here tax-free, all of these things are coming into play. Now, people used to come here and work for 3 to 5 years and plan to go back home or wherever they were from. That's changed. So what you're finding is a change of mindset in terms of the clientele. You are now finding families wanting villas, and you're finding that Dubai itself is so good at picking up those trends that it's completely changing the narrative of how people look at property. So now they're looking at the UK and going, okay, well back home, we used to leverage our properties all the time to reinvest into a market, to create passive incomes by renting, etc. Now we're getting that here. I don't think it was a big thing way back, but now it's a more popular thing.
Well, thank you for your time today. It's been a very interesting conversation. And just before we kind of part ways, do you want to just give us a little bit of information about our new series that we're going to be doing, Keys to Dubai?
Yes, indeed. So there's a number of us brokers that are working with Hyde, and the aim of this is to basically help. Keys to Dubai is an idea we came up with of where you would then showcase the properties that you have listed, and at the end we will give you an example of what a mortgage is actually going to look like on that property.
Excellent. So I'll be seeing you next for the Keys to Dubai session, and then we'll be handing over to our wonderful colleagues in the respective firms to then continue that series.
Absolutely.
Thanks for your time today,
Pleasure.
Nathan.
Thank you.